Hi, I'm going to explain you how a grid trading system works. So we have a sample chart over here. It's done with Paint, but it's okay to cover the basics. In a grid trading system, we want to enter trades in about the middle of the price tunnel, like this. Um, Here we enter a short position and a long position at the same time. And as you can see, the short position is filled shortly afterwards. At this point, we have made no profit yet because the long position is equally negative as the short position is positive. And here we get our first drawdown as the price keeps moving down and only the long position is open. But above this point we are positive because the profits of the short position exceed the negative part of the long position. Up here we get another small drawdown because the price changes its direction again, but it's only for a short time, and then the price keeps going up and the profit of our long position is taken. Usually you don't want to enter only 2 trades at once but several, and that's why the system is called a grid trading system, because you have several virtual grid lines and along these lines you enter the trades. And normally your profit target is the distance of 2 grid lines. So in this case the long positions are closed when a new long position is opened. Important part about the grid trading system is that it doesn't make profit on strong price movements, but on frequent price movement changes. As you have seen here with our chart, you didn't make profit on the first price movement, but you started getting positive with the first price movement change. So when to use a grid trading system? You usually want to use a grid trading system on markets who are relatively stable on a long period of time. For instance, here I have the last 6 months of the euro franc. And as you can see, the difference between the highest high of the period and the lowest low is around 500 pips. So that's okay. These 500 pips would also be a good value for the stop loss, because in the grid trading system, if you want to use a stop loss, you don't have to. You want to use a very, very wide stop loss because you don't want your trades to be stopped out. And usually it is very difficult to detect such market situations with technical analysis. So it is recommended to watch the economic data and then find some markets who will behave very stable for a long period of time. I have also a negative example here where you shouldn't use a grid trading system by all means. These are the last 6 months of the Australian dollar US dollar pair. As you can see, there is a very strong downwards movement taking place. So everyone who attempts to run a grid trading system on this kind of chart gets a margin call relatively fast. Yeah, so that's it. I hope you enjoyed it, and goodbye.